pain continues. I mentioned in my video on Wednesday that I expect the bottom to not be in, and that we'd be coming even lower to retest the previous resistance of the macro, now acting as support once again, and that is the case. Thursday and Friday, Thursday and today, just riding the trend down, but still holding that support, so it looks good. And I'm going to be getting into that, as well as the micro resistance that we're facing and where it's heading in the next 2 weeks. So with that being said, let's jump into the video, starting with the macro perspective, as we always do, starting from IPO until today. So the equivalent of the January squeeze right here in the green, the retracement, the pullback, so the green, the retracement, pullback, and then all-time highs from IPO right here would be the equivalent of the June squeeze that you're seeing here, the V-shape, and then your macro break in this blue box right here, equivalent to right here, before you actually get into the downtrend, which is a descending wedge. And I have the boxes labeled this time with the colors. So the green, the first iteration, the W, just stair-stepping your way down here until you get to the end of the blue, where you drop to the flat portion. This green horizontal line that you see here, you play out the whole flat portion, break out, and retest in this yellow box. Very small, but it's there. And then over here, same thing, breaking down from the blue, playing out the flat portion here, and then you get the breakout and the retest in the yellow. And that is it for that. I have the macro right here once again. It's a little bit less cluttered. I don't have the boxes here. Same exact thing I just showed you. I just removed the boxes from the wedge. So again, the downtrend that you're seeing in the previous macro is the equivalent to the downtrend you're seeing in the current. Both are descending wedges that end with the flat portion playing out, and then the breakout and retest, which is what we're in right now. Again, keep in mind this white horizontal line on the bottom is 0 on AMC, and in both macro perspectives, the previous and the current, the descending wedge was heading for 0. Came very close to seeing 0 in the previous macro, and now heading for 0 once again in the current macro. And as a matter of fact, the previous macro ended with all-time lows right here before a squeeze. So it's possible this was the plan the whole time, to see all-time lows on AMC before we squeezed. That's pretty much it for the macro. Macro looks great. We're at the end here. There's no pattern left. The macro pattern being the descending wedge, we're at the end of it, broke out, retest. This trend is heading to 0 very, very soon. And what that tells me is that there will be a new trend, i.e. a new macro, and more than likely starting with the squeeze. So moving on to the breakout and retest now. Again, this is the macro trend on AMC in white, the descending wedge, and the supports on the bottom, resistance up top. So starting right here is your first rejection, rejection here, halted right here, rejection, halted right here, rejection, halted right here, rejection, rejection here, and then you finally break out of it, and now retesting, holding up very nicely as support now. So the previous resistance of AMC is now acting as support, albeit we're at all-time lows, but still it's acting as support. Again, the final iteration of AMC, the bilateral triangle here that we spent a year in, very, very tight range here. This bilateral triangle actually broke us out of the macro wedge. The breakout coincided for both patterns, retested the triangle, and then came down to retest the wedge now. So overall, this looks very good. Once again, the halts, this is the exact same slide I just showed you. The halts are just here now. So again, January and June, we obviously halted on squeeze day. This was the first halt here in March, the second halt here in August, I believe. Again, halted in March. And I threw 2 more halts in today. One right here and one right here, both when you came close to breaking out of the bilateral triangle. Twice we were halted in the bilateral triangle when we were close to breaking out of it, and then we actually did poke through the top of it and came near the resistance of the macro and halted again. This is pretty much just showing you that this is in fact the pattern. This is the pattern on AMC. The descending wedge here and the bilateral triangle that broke us out of the descending wedge. We even got halted on these moves here because we weren't ready to break the triangle yet. Had to play out the rest of this. And again, halted on the breakout to come down and retest both the triangle and the descending wedge that we're testing now. Looks perfect. Now, moving on to the weekly chart of AMC. This is from IPO. I have volume right here on the bottom, and then under that I have OBV. So really quickly, we'll start with the volume. Same. This is the macro perspective, the full macro I covered at the start of the video. So from IPO, very low volume back here, all the way through this until you get to the end of the wedge. So the descending wedge, the downtrend, the end of the macro. This is the end of the macro, the descending wedge, before you break out and squeeze. This is the start of a new macro right here. So very low volume all the way through this. I don't know if you can really see it. It's pretty small. And then starts picking up towards the end of the wedge here. When you get to the flat portion, you start picking up in volume. And then you get your breakout move. Volume really starts to pick up before you have all-time high volume on the January squeeze. And then you pull back for the retracement. And the volume profile coincides with that, pulling back for a cool off, and then another pump here in June. The volume spikes again. From June, play out the flag and break down from it, and this is where you get into the descending wedge here. And from June, volume has been decreasing. So from June 2021 until 2 months ago, volume has been in a decreasing trend all the way down, lower and lower spikes here, and all the way at the end of this, volume was very, very low back here until we got the breakout move where volume picked up, and the retest where volume is through the fucking roof right now and actually matching June and January volume levels. Again, the retest of the current macro, we are already sitting at the levels of volume that we saw in January and June 2021. What this tells me is that the volume on the squeeze is going to be ridiculously high. If we've already matched the volume of the previous two squeezes on the retest at all-time lows, the volume of the squeeze is going to be ridiculous. So the volume profile looks perfect. Macro looks perfect. And now getting into OBV, which again from IPO, very flat. Then this became a meme play when we squeezed in January. And the OBV takes off and then rockets again in June. And then from June, through all of this selling here, all of this downtrend, all the way down to all-time lows where we're currently sitting at, OBV has been relatively flat up here, just hovering around all-time highs, and actually broke out of the downtrend on the OBV and has now retested it twice. So the breakout here just floating above, get the actual breakout move. First test, bounce up. Second test is where we're sitting right now, still holding up on the upper resistance on OBV. So the volume profile, the OBV profile, and the macro fractally on AMC looks great. Getting into the retest now and some important dates. So again, and I actually adjusted the trend slightly, very, very slightly. The previous resistance now acting as support, I adjusted it slightly where this would have been the first poke through right here and just bouncing on top. This is more or less a fake out, break back through, again fighting for it. Then you get this nice pop here when you bounce off, and then pretty much flat here. This was the end of the bilateral triangle, so really didn't get a chance to test the wedge here. It would have been nice if we did, but we never actually tested the wedge back here. This was the end of the triangle. The bilateral triangle support on the bottom was holding us from retesting the wedge. And then again, breaking out of the triangle and the wedge at the same time, coinciding here. This move that you're seeing right here, the pullback to test the bilateral triangle here, and then you get this downtrend, this descending resistance of the retest, which is holding us to the previous resistance of the macro, the wedge, now acting as support. So the first rejection here being on the breakout move, this was the retest of the triangle, and then our second touch on the resistance of the retest, knife there, climb back up, 10 more wicks off the resistance there, knife again all the way down to the resistance, the previous resistance of the macro acting as support now. Get your first bounce off right there, breakthrough, again fighting for it, and then you got the move up. This was that 17% day. Makes sense that we would have just been bouncing off of the previous resistance again. That's why we saw a 17% move off, and then again very flat until you got to the resistance of the downtrend. So rejection, 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 10 wicks there, and then again rejected here, and then coming back down to the support, the previous resistance now acting as support, and we are just riding the support level down. And again, so we'll get into some dates here. So the resistance of the retest, this red trend line that you're seeing here, and the support of the macro, the wedge, is meeting on September 12th, which is Tuesday next week. These two trends intersect. So the resistance of the retest and the support of the macro are intersecting on September 12th, which is Tuesday next week. Now I also ran the trend line of the resistance of the retest. I ran it all the way down to 0 because this is a very strong resistance right now. I just wanted to point this out. So first rejection here, second rejection here, again multiple wicks off right here, another rejection here, and I just ran it all the way down to 0. This trend hits 0 September 15th, which is Friday next week. This resistance line that we're seeing, that we're trading in right now, is hitting 0 on Friday next week, September 15th. I don't think we're going to 0, not by any means. I'm just pointing this out. What this is telling me more than likely is that next week will be green, possibly a confirmation move off of the support here and breaking through the resistance of this trend that we've been battling since July 21st, over a month. And then one more important date being September 26th. That's when the wedge hits 0. The support of the macro, the descending wedge, hits 0 September 26th. So we are heading for 0 right now. I don't think we're going to it. I'm just pointing this out. Both the macro trend, the descending wedge, and the trend of the resistance of the retest is hitting 0 this month. Again, what this is telling me is that we're ready for a new macro pattern on AMC. And I don't see I can't imagine a scenario, a fucking world where AMC goes to 0. Not only does it not make sense fundamentally, which fundamentals don't mean fucking shit, but it doesn't make sense fundamentally, but just on the grand scheme of the market, AMC going to 0 makes absolutely no sense. So just pointing that out. And if we don't go to 0, that's pretty much implying that we're going to be squeezing, which potentially could be the MOAS. So moving on from that, getting into the actual retest now, the tracking. So the tracking on the micro that I've been tracking since the breakout move. So end of July until today, and it's tracked perfectly. This was an old screenshot. This was the week that I was streaming, just tracking this. Literally drew the price action before it happened, and it was following perfectly. Again, we were looking for a gap down to this white line here. The equivalent here, this is the retest move. This is the confirmation of the retest, and then the bounce off, the confirmation right here. From here, you gap up and a straight line to your squeeze. So getting into the updated, here it is. Really quickly, I'll go over it again. This is the breakout move of the January 2021 cycle. The gap down right here is the retest. The bounce off is the confirmation. The gap up from here is your macro break, and then a straight line to your squeeze. So again, the gap up right here being the breakout. Come down, you play out the rest of this pattern, the stair-step move from the red to the blue you're seeing here, the uptrend that you get off of this trend, the break below the uptrend, and the rejection here, as you see here, the break below, the rejection, the gap down. So again, looking for a gap down to this white line. We ended up gapping down lower, but the movement is still perfect from the gap down, the uptrend that you see here that we got, and then the downtrend to a lower low. A very, very drastic knife down here. For multiple reasons. First of all, AMC and APE met at the exact same price for the conversion. Very drastic, but that was always going to be the case. The fact that it met at the same price to the penny the day before that after hour closed, the day before APE was converted to AMC, it closed at the same exact price to the penny. Filling all the downside gaps on the macro, triggering stop losses, shaking out paper hands, also forming a all-time low on the macro, which that is how the last macro ended. The previous macro of AMC ended with an all-time low right here before you squeezed and got a new macro. So it's very possible that was always the plan, fractally speaking, of course, seeing a new all-time low. And I'm probably missing some reasons, but this retest makes perfect sense. Oh, the last one, the slope of the trend, the slope of the macro trend, the descending wedge on AMC, we had to come this low to retest this trend. That was the last thing I was missing there. So the tracking looks perfect still. Very, very drastic retest here, but it is a retest nonetheless and is tracking the way it should. Volume profile through the fucking roof. OBV pretty much at all-time high still. And with that being said, we are down 91% from July 21st, this breakout move right here. July 21st, the breakout of the bilateral triangle and the descending wedge right here. I believe this was a 100% move after hours. 38 trading days later, we are down 91%. This is the retest of the descending wedge here. Again, the fake out you see here, the break back below, the pop through, the end of the bilateral triangle, support meeting resistance here, the breakout of both the triangle and the wedge, the retest of the triangle, and now coming down for the retest of the wedge. And here is that resistance I was just talking about. And we're just riding this trend down here. The first bounce here, the break below, chopping down here, the 17% move off. Again, rejecting the resistance here, another knife, and just riding this trend down right now. Again, this descending resistance of the retest is meeting the descending support of the macro on Tuesday next week. So down 91% on AMC right now. And not that it fucking matters, not that I care, but 2023 is all-time high revenue for AMC, and we're at all-time lows. Again, just proving my point that fundamentals mean fucking nothing at all. So, yeah, so fundamentally, AMC is worth way more than what we're sitting at right now, being at all-time high revenue for the year. OBV is pretty much at all-time high still on the weekly. The volume profile is matching January and June levels. Go back to it. So again, yeah, the weekly on the OBV is at all-time highs, actually broke out of the trend, retested twice now, the second bounce off the top here, and the volume profile at all-time lows, the volume is matching January and June 2021 levels where we squeezed. So this looks very good. Only two things make sense here, being down 91% in 38 trading days. There's only two things that make sense logically. Number one, we're going to zero, which I don't think is the case. Number two, this is a retest of a macro breakout. Those are the only two things that make sense, just logically. We're actually going to zero is number one, which again, I don't think is the case. And number two, this is a retest of a macro breakout, and a very drastic one at that. And I went over all the reasons. I'm not going to do it again. But technically speaking, this retest is perfect, and we're just riding this trend down right now. The previous resistance of AMC now acting as support, and we are just sitting on top, just riding this down, just the same way we saw in the previous cycle. It just played out faster. The breakout and retest played out faster, and the slope of the trend wasn't as steep as the current. Couple more things. The Fibonacci spiral. I haven't shown this in a while. So from all-time lows on AMC to all-time highs, we actually have a new all-time low over here. I'm not really counting that for the time being. But starting from IPO, the first touch point being the original flat portion, the January squeeze come down, actually bounce right off the spiral on that retracement. The June squeeze obviously rejects the top of the spiral, the downtrend all the way through, and we are now sitting outside the Fibonacci spiral. You can't really see it right here, it's blurry. But the Fibonacci spiral is pointing towards a price target of $2,600, which is completely plausible. Mine, again, is $1,400. $2,600, definitely a plausible price target. Getting into the Fib spiral zoomed in now. Here is the breakout of the bilateral triangle coinciding with the breakout of the descending wedge, the retest of the triangle, the rejection off the Fib spiral here in blue, the first rejection off, come down, the uptrend, tracking wise that we should have seen, again rejecting, and then just continuously rejecting the trend here until we found a bounce off the previous resistance of the macro, acting as support, poke through the Fib spiral, and now gap down again to test the wedge again, and just riding this trend down. So this looks perfect. And one last thing, the AK dropped, I think it was Wednesday. I believe it was Wednesday, yeah, when I made my video. Adam Aaron can now dilute the float once again, and I'm just going to read this and leave the video here. AMC issued new shares in January 2021, diluting the float, and the stock soared. In June, again, after issuing more shares, the stock went up again. In July of 2021, as requested by shareholders, AMC stopped issuing shares, and the stock has plummeted since. In other words, there was dilution in January and June of 2021, and we squeezed both times and have not seen dilution since. Have seen nothing but red. AK drop Wednesday. At America now dilute the float up to 40 million shares, which is more than both January and June combined, I think. I'm pretty sure it's more than both combined. Theoretically, we should be seeing a higher percentage move to the upside. And I'm going to leave the video there. So next week, I'm looking for green. It wouldn't really make sense not to see green, at least breaking this trend, because if we don't break this descending resistance here, this will be taking us to zero on Friday. So I'm assuming we're breaking this resistance next week, so we should be seeing green next week, and should be bouncing off of this previous resistance acting as support. So that's pretty much it. I will catch you guys next week. Hope you guys enjoy your weekend.